The equities markets can often be used as an indicator for potential currency moves. However, in my experience, it is in a limited capacity. The indexes are a good tool to use to gauge current market sentiment about the overall health of an economy, thus indicating sentiment towards monetary policy and in turn currency strength. Notice I said sentiment because I do not believe the equities market is a good gauge of the overall health of an economy. Only the sentiment. There's actually more of a correlation seen when the markets are in risk-on, risk-off mode. In this situation, you will likely see higher yielding currencies rally with global equities and safe haven currencies decline during these rallies. This is known as increased risk appetite. Just the opposite when the equities markets start to decline, then we see money flowing out of the higher yielding currencies and into the safe haven currencies. This is known as a risk-averse market. And this tends to affect the markets more on an intraday basis. On that note, one of the currency pairs that is highly correlated with the U.S. equities market is the dollar-yen, and specifically we'll look at the S&P 500. And similarly, there is what we call an inverse correlation with the Japanese yen and the Nikkei. And the main reason for that inverse correlation with the Nikkei is because a weaker yen is positive for Japan's exports. And while a weaker yen does have a negative effect on companies that really rely on importing, they're heavily outweighed in Japan by the companies that benefit on exports. But one of the things I like to look at if I am trading the dollar-yen during the North American session, I like to watch the S&P, and if I'm trading any of the yen pairs during the Asian session, I do like to follow the Nikkei. Because any potential setups that we see on the Nikkei or on the S&P can also affect those yen pairs. Also, if we appear to be coming into some major tops in those markets or major bottoms in those markets, it's worth considering taking a good technical look at the dollar-yen or the yen pairs if we're looking at the Nikkei, any of the yen pairs. Here's a daily chart of the S&P. And you can see here I have put the dollar-yen on here also. The blue line chart is the dollar-yen. And you can see the strong rally here, the strong rally along with the S&P 500. Now you can see at the top here, when the S&P, you can see here a little bit of a consolidation, more of a consolidation, a triangle here on the dollar-yen. And now that we're consolidating up near these highs, we're also seeing some consolidation here on the dollar-yen itself. This chart is the Nikkei, and you can see I put the Aussie yen, the pound yen, and the euro yen on this chart with the Nikkei. The bar charts are, well, I can just change one of them here to, I will change one of them to a line chart. And let's just change another one here to, we'll just change it to hollow candles. There we go. Or actually, let's see. Yeah, that's fine. Hollow candles will work for now, just to get the point across. Okay, so we have the euro yen, these hollow candles right here. We have the Aussie yen, which is the line chart, and we have the pound yen, which is the bars. And then, of course, the Nikkei are the candles here that you see, the regular solid candles. And you can see the correlation here. The rally in the Nikkei, the rally in all three, the Aussie yen, the pound yen, and the euro yen, which is showing significant yen weakness and the inverse correlation with the yen and the Nikkei.